Okay, so this was the exam question number 1, and we're just going to do the first part, which is posting to ledgers. That was where we had the business Mapp, which we represent. So we will refer to it from Mapp's point of view. So whenever I say we, I mean from the business point of view, okay? So here are some transactions, and they just asked you for 3 of the accounts. So you didn't have to do each account, just do 3. So what we're going to go through, because I think it is much easier if you had to do the general journal and then probably post to the ledger. But a question like this can come in the exam where they give you the transactions and you have to post directly to the T accounts. The secret is to make notes. I don't know about other classes, but the boys that I would have corrected for did not really, except I think for one, do the notes. So I'm going to show you how it's much easier if you do notes or scrap paper. So, okay? Okay, so the first account that we're going to do is going to be Massy Motors. Notice up here, I keep on telling you guys, so I'm going to emphasize it again. The best thing when you see anything to do with double entry, which this is, posting to ledgers or doing your general journal, is to put your double entry rules. You can just put the increase like we have here, and then the decrease would be the opposite. All right, so we have this here, and we are going to do Massy Motors. So all we're going to do is focus on Massy Motors. So here we have each transaction. And since we are doing Massy Motors account, that is what you are going to be looking out for. So the first transaction you would see, there is nothing with Massy Motors. On the 7th, however, there is purchased a motor vehicle worth $35,000 from Massy Motors with a down payment of $25,000 by check. So you should one time, what you do is you look at Massy Motors and you know that this transaction is going to deal with Massy Motors account. So you can do it one time, or like I did, I just would have underlined it or highlighted. Well, underlined because in the exam you cannot highlight. And you go and you check the other transactions. And all the way down here is where you would find the 26 Massy Motors. None of the other transactions have it. So we're going to start with the first one, which is the 7th of May. And we know that it involves Massy Motors, but what are the other accounts that are in the transaction? That is very, very important, because when you go to your T account, which is Massy Motors, for the details, you have to know the other accounts involved. Okay, that is what your details are. So motor vehicle was purchased. So this will be an account that you would have had to post to if they had asked you for it. And down payment, $25,000 by check. Every time you see check, it means bank. So motor vehicles is an asset. Since it was purchased, it will be debited because a purchase means it increased. So you know that you're going to debit motor vehicle. Once again, we are not asked to do it, but you need to know. You need to know, okay? So you make a little note here. You could just put DR for debit here. And then as we said, the other one is check. The account for check is bank, and bank is an asset. When you purchase something, you spend money, you make a payment, and a payment is credited for an asset. So that will be credit bank. Now, is Massy Motors a payable? Meaning, do we owe Massy Motors? Because if we didn't, Massy Motors would not have any transaction entered. But what you see here is the motor vehicle is worth $35,000, but a down payment was made $25,000. which means that, do we owe Massy Motors still? Yes. Yes, we owe them still, which means that they are a payable, a liability. And for liabilities, what do? We credit. So yes, we're going to credit Massy Motors. The next question we're going to ask is how much? So how much are we going to credit Massy Motors, which is the account that we are going to be doing? How much? And you just work it out in your head, but I'm just going to put some visuals there for you very quickly. How much was the motor vehicle worth? $35,000. How much did we pay as a down payment? $25,000. So therefore, how much do we owe Massy Motors? It will be $10,000. So how much are we going to credit Massy Motors, which is a payable, a liability? $10,000. How did we get to $10,000? Motor vehicle with $35,000. We only pay $25,000, still owing $10,000. So that means you could just put a little note there, credit Massy Motors $10,000. And now we go to the account. Remember, we are only focusing on that account for now. So we have a Massy Motors account. And we are only looking at what we do to Massy Motors. And Massy Motors account, which is this, it says go on the credit side. That is what it means to credit. So you go on the credit side, always this side. You put the year, so 2022, make sure and put it on the other side as well. And what is the date? So you go one step at a time. We are on the credit side, the year. We put the date, which is May 7th or 7th of May, whichever order, doesn't matter. Your details. Remember what I said, your details cannot be Massy Motors. If you are in Massy Motors account, you cannot have your detail as Massy Motors. The detail is the account that the opposite was done to. So we are on the credit side, which account therefore was debited. It was not bank account, so it would not be bank. So you ignore bank at all, because bank is supposed to be credited just like Massy Motors, but you want the account that the opposite was done, which is debit. And we will see here, remember, if you take your notes, you will see it one time. That would be motor vehicles. So your detail is going to be motor vehicles. Now remember, once again, accounting is a language, so just think about it. We're in Massy Motors account. That means it's a liability. We owe them. What do we owe them for? Purchase of a motor vehicle. So this is what this detail is telling you. We owe them because we purchased a motor vehicle on credit. Was it fully on credit? No. How much do we owe them? So you're not going to put 35,000 because we don't owe them 35,000. We paid them 25,000. So how much do we actually owe? 10,000. So this is the amount that is going to go into this account. See, so when you read this, you will see on May the 7th, purchased a motor vehicle from Massy Motors on credit, 10,000, meaning we owe them $10,000 for a motor vehicle. Good? Nice. And that's it for this transaction. You don't have to do anything with the other accounts. So only this one, this entry, get your marks. Then there was the other transaction we identified Massy Motors for, which is the 26th. So once again, what do? We have identified Massy Motors as an account. We read the transaction. What are the other accounts? They said settled the account, which means that we're going to pay how much we owe. Now, if it is that when we owe, the liability increases, so your credits, if we are paying off that liability, it means you're going to go on the other side, that side, which would be your debit. So you're going to be going on this side, and this is why Massy Motors, we will debit. So you have your little note, which side are we going to be going on? The debit side. But before we do that, let us find out what the other accounts were. So we settled the account and we purchased by check. Now, every time you see check, which is the account, bank, and you just think about it. Did you pay money or did you receive money? We did the payment. Yes, we did the payment. We were the ones that owed Massy. So therefore, we went and we paid Massy. So that will be bank. And since we made the payment, credit. But yet they said, you know, we didn't pay the whole 10,000. There is more. They said we were allowed a discount for early payment of $100. Now remember, we are always looking at it from the business point of view. So even though it said was allowed, did we give the discount or allow it, or did we receive the discount? We received the discount. Anyway, we know it's a discount, $100. Here's how do I know for sure that it is discount received? I just said it from the business point of view, which is that we are the ones who received it, so it's a discount received. But here's a little secret. Discounts, cash discounts, which means discounts allowed, discounts received, those that are given or we receive for early payment, they have a direct relationship with bank or cash. Meaning that if we make a payment, which is a credit for the bank, the discount is also credited. And which discount is credited? The income credit, which would be the discount received. If bank was debited, then the discount would have also been debited, and that will be a discount allowed. So that is a nice little secret just for confirmation, or if this is easier for you. Once there is any bank or cash involved because you paid money or you received money, whatever you do to the bank or cash, you do the same thing to the discount, and that would identify the discount, whether it is discount allowed or discount received. Once again, in this case, we made a payment, so we credited bank. Therefore, the discount will also be credited, which is discount received. Good. Hope you learned something there. So now we're going to go into the account, and once again, only focusing on the Massy Motors. That's the only account that we were told to do. And what side or which side? Debit in our little note. So we go down to the debit side, and you have your date, which is really easy to put, right? Just put it, 26th of May. You should have had your year already. The detail is the account or accounts that the opposite was done. We are on the debit side. So in your little notes here, you're going to look for which account or accounts were credited. And look in our little notes, you see that we have the two accounts, both accounts were credited, which I said always happen. You will always see bank and discount on the same side, cash discount on the same side for the particular transaction. So we go down to the here, details. Since there are two accounts, that means you're going to put bank or discount received, doesn't matter which order, but I will go with bank. And you will have to go to the next line and put the date again and discount received. See there, because both of them were credited, which is the opposite of the debit side that we are actually on. What are the amounts? How much did we pay? If the discount was $100 off, so you have discount received, we received 100, you have that amount there. How much did we actually pay? 10,000 minus the 100, which would be 9,900. And this would be your transaction. Now, I think I saw a few people from my class, they got the 9,900 and some even got the 100. The issue was really what the details were. So hopefully this is clearer. You can just go back and look at it again and just go through it. So this now here deals with the 26th and you have just completed your transaction. So the last thing that you have to do after you have entered all the transactions is you now have to just go and balance it or close it off at the end of the period. Remember how you do that? Okay, simply you go and you have your total areas. Which side has a greater amount? Both sides are equal. This is why I didn't skip a line. For people who know, I usually say skip a line. This is why, because I just recognize 1 time is equal to 10,000. So your total for both sides is 10,000. That means there is no balance, right? It is totally settled, paid off, and this is what your account should have looked like for the exam. Take a breath. Move on to the next one. We'll go a little quicker for that because, you know, just so we can keep this as short as possible. So we have done Massy Motors. What we're going to do now is our focus is now changing and it is going on the purchases account. Just remember, purchases account is only used for purchase of inventory, not purchase of fixed asset. So we go into our transactions and we are looking to find which transaction involves the purchase of inventory. Started a business? Nope. So not that one. Oh, remember to put your little Alice. Well, you will have it there already. And we are focusing on the purchases account, which is an expense, right? So that is there. First transaction, nothing. Second transaction, some people thought that this was a purchase, but remember, once again, purchase of inventory. Motor vehicle for Mapp, the business that we represent, is a non-current asset. So this does not fall into purchases. In fact, when we had done this one, this was motor vehicles was the account. So that means this is not a transaction for your purchases account. Bought goods on credit from Emily. Bought goods. Purchased inventory. So this transaction involves purchases. So we have bought goods, which would be purchases, and as an expense, purchases account is debited. See how easy? So we have this here. However, we still have to know the other accounts because when we go into the purchases accounts, we need to know what the detail is or are, right? If there are two accounts. So if we purchased on credit from M. Lee, that means M. Lee is going to be an account. But notice the ending here, less a 10% trade discount. Why is this important and why did I emphasize that first? Basically because trade discounts do not go into your accounts. They don't. All right, it says cash discounts, which is discounts allowed and discounts received. So which means that to work out how much we purchase the goods for and how much we therefore owe Emily is only the 90%, which is 100% less the 10%, 90% of the total amount, which means that we only purchase for 3,420. Yeah, I hope you got that. Remember, trade discounts not entered at all in your accounts. which means you just find what your net figure is, the figure after you less your trade discount, and this is the amount that will go into your purchases account. And this is how much we actually owe Lee. And since we owe Lee, it's a liability, and that means the account is credited. But we don't have to show that. We are now going to go into the purchases account. What we're going to do for this one is, instead of going, and which you can go and enter the transaction in the purchases account one time. What I am going to do here is to make my notes first. All right, so for the purchases, we already made the notes for the 11th. Going to show you now for the 15th. We look and we see, is there a purchases account? Mapp took $50 worth of goods from the business to give to his friend as a birthday gift. When you see birthday gift, that means it's for personal, private use. And whenever you see something for personal, private use, what does that mean? It basically means that it is drawings. Yeah? So, birthday gift, $50 worth of goods, birthday gift. That means that it is drawings, and drawings is always debited. Where does purchases come in though? Does it come in? Yes, because what did we withdraw for personal use? Inventory, not cash, not bank. And which inventory account is used whenever we have drawings? It will be purchases. And what do we do to purchases? We credit purchases. So just a reminder, the explanation is we purchase inventory to sell. So if we take some of those purchases and give it as a birthday gift, that means we have less purchased goods to sell. So you have to credit your purchases to show that there is a decrease in the amount of purchased inventory. All right, if you don't remember that explanation, just always remember, drawings are always the debit. For inventory, purchases is the credit. Sweet. So you check the 20th. Is there anything with purchases? No. The 26th, is there anything with purchases? No. So that means that our two transactions for the purchases account would be the 11th and the 15th of May. So now we're going to go to the account. As I said before, some of you could have gone and you could have done this one first and then go and look for the others. So we're in the purchases account. You have your year, and which side are we going on? The debit side of the purchases account. You put a little note here, so that will mean this side. You put your date, which is May the 11th. What is the detail? The detail. We are on the debit side, so you're looking which account was credited. Lee, so your detail is going to be Lee, which is a payable. You don't have to put payable here. I just put it there for you to know. So Lee, and how much? 3,420, which a lot of people got, but you didn't get necessarily the detail or the side. So here it is for May the 11th. For May the 15th, remember what we said? We looked at it. It was drawings debit, which means that the drawings came out of the purchases account, which is a credit. So which side are we going to go on? The credit side. And you're going to put the date. See, easy, one step at a time. What is the detail? Yes, the account that the opposite was done. So in other words, if we're on the credit side, which account was debited? And that would be drawings. And how much? $50. And therefore, you have just done the two transactions. See how nice and easy? Real nice and easy, quick. So what's the next thing that you do? Since purchases is a nominal account, it would not be to balance, it will be to close off. But the only difference is instead of doing balance, carry down and brought down, you just do income statement. So the same steps. This time, because the amounts are different, going to skip a line and we're going to put the totals. Now this is my order. You can get your order, program yourself how you're going to do it. So I just skip a line and I put my total areas on the same line. Which side has the greater amount? The debit side. So you just put the 3,420. Then you go over to the other side on the same line and you put the same 3,420. So we good there? And then the side that is less, because what has to happen is the total has to agree with the amounts on the particular side. 3,420 equal to 3,420. 50, no. So which means the side that is missing an amount, you're going to go and notice above the total line, end of the month, May 31st, not balance brought down, carried down because it's a nominal account. You just simply put income statement or transfer to income statement, which is too long. So we just put income statement. And what is the missing amount? 3,420 minus the 50 will give you 3,370. And that's it. Unlike your balance, you don't have to go on the other side or anything. You just stop right here, income statement, the amount. Make sure this side now adds up. Both sides are equal to the 3,420. This is how your purchases account should look based on the two transactions that involved purchases account. Okay, so we will just go very quickly into the sales account. You will do the same steps. You will check through all of your transactions to see any that involve sales. Just remember, when we're talking about sales, we're talking about sale of inventory. So you sale of goods, sale of stock. That is what you're looking for from the business point of view, LMAP. So only one transaction, which is the 20th, sold goods. So this is our transaction. The goods were worth $490. So that means the full sales is $490. However, to go into the accounts, we need to know the other accounts, especially for the details, right? Now you'll remember what you do with sales, because I'm supposed to have my thing there. Sales is income, which means sales would be credited. So which side are we supposed to go on? We're supposed to go on the credit side, right? So the other transactions would be $250 by check. Check. Every time you see check, that means bank. What happened with bank? Did we receive or did we pay? Since we sold goods, we received money. How much did we receive? $250. So bank is going to be debited because we received money, right? So we can make a little note of that, but just remember, this is our focus when we go into the account. So you debit bank and with a balance to be paid later. What does that mean? That means that we did not get or receive all of the money for our sales. That means that there is a portion of it that is still owed by D. Gopal, which means he's a receivable that owes us $240. So receivables, assets would be debit because we still have to receive. That money is ours. It's an asset. So that means it will be debited. Good. So we have our sales. We know that there is a debit for bank and there is a debit for receivables. So now we are going to go into the sales account. Learn to focus because it will be a lot less confusing if you have to put an asterisk or you have to block off anything. you do that. Our focus is sales account, and which side did they say to go on? Because it's income, credit side, so we're going to go on the credit side. So we put the date, easiest thing, May 20th. Make sure and have your years for all your accounts. May 20th. Can you remember what are the details? We are on the credit side. Which account or accounts were debited? So we have a debit for DGoPal and a debit for bank. So that would mean that we will put both of them. And bank, how much did we receive? That is the amount you have to put there. Just ask yourself these questions, because it's basically, it's reality. You just think it's a language. How much did we receive? 250, because we did not receive 490. And I saw some people put 240, but did we receive 240? No, it says it here, 250. So 250, and then because you also have DGoPal, you put the date again, you put DGoPal, which is a receivable. How much does he owe, or he or she? How much does he or she owe? 240. And you know how you got it 240? Because the whole stock is worth 490 and we received 250. So that means he still owes us the remainder, which is 240. You could just double check this, add up these two. Once it's credit 490, you're good. That is how you know. And this is it for the transaction. All right. So the last thing that you do after you have entered your transaction is to close off, because it's a nominal account. So you can put your totals. It was obvious which side is the greater amount. That's why I didn't skip a line. But anyway, so you just put your totals, 490 and 490. I should have put this first, 490, and then you go across here and you put your 490. And that means that on this side, your missing figure would be 490, which May 31st, end of the period, not balance, income statement, because it's a nominal account, 490. And that's it, no going down below and doing anything. And this is what your sales account is supposed to look like after you have done your transactions and closed off the account. So that's it basically. These are your answers for this particular part. In another video, we'll go through the cash book. Hopefully it will be quicker because the cash book is much easier. I realize that you have a bit of trouble with this. I will suggest that you attempt to do motor vehicle account. So as soon as possible, I will post a classroom on assignment for that, where you try just to do simple, because I know you're on vacation and stuff, so I'm just giving you little by little. Okay, so hopefully attempt it and see if you understand it. All right, any questions, just message me.